have a great day. Hope you guys are having a very good day. So today, as we do every in the every session, we'll be discussing about the pre-market newses and overnight newses, which actually triggering some stocks and the movements, and also the open interest rise, which stocks are having a high open interest. Will start shortly. Hope you guys can see the screen. I'm sharing my screen. So market has already opened. So we'll start. So for today, there is actually plenty of important updates lining up. And if you are a trader and investor who's watching this, you shouldn't actually miss this today's session. So we'll be, as I'll tell in every session, we'll be covering everything you need before actually market opens. We look at TCS quarterly results. Yesterday I mentioned it was there after the market close and the expected gap up openings, and also the global market cues, also FI and DI activity, geopolitical developments which happened, and finally the option chain and open interest data. So, to understand where the market could go. So before we jump into today's market setup. Let's quickly take a look at how the market performed yesterday. So on the July 9th, the market managed to close on positive territory despite actually mixed global cues which happened yesterday. And Sensex closed at 76,740, 1.82, gained to 38 points, which was nearly 0.31% increase. And Nifty 50 is also had a positive session, ending at 23,960 by 80, nearly 81 points, which is 0.34%. Actually, yesterday's real star was Bank Nifty, which is closed at 57,252, which raised almost by 510 points, which is actually a solid 0.90%. So, banking stocks which showed a strong buying throughout the whole session and also played a major role in keeping the overall market positive yesterday. So most of the buying interest was seen in banking space, and while several frontline stocks also supported the yesterday's rally. Overall, if we take, it was a healthy trading session yesterday with a positive market sentiment. So people be having this question like, can the market continue in the same way, in the same momentum for today also? So we'll see uh, some profit booking after yesterday's gain, or they'll be having some certain questions. That's exactly what we are going to find out in today's session, and whole analysis we'll get to know. So actually, as we observed, one thing we should note down that yesterday's the whole rally wasn't smooth from the start to finish. In fact, Nifty touched an intraday high of around 24,134, and at one point, it looked like the market might comfortably stay above 24,000 level. But however, during the last hour of like trading afternoon, we saw some profit booking, and traders who had already made gains started booking the profits afternoon, which pulled the index lower. So as a result, Nifty it's slipped back below 24,000, and Mark also like finally closed at 23,962. So the whole final hour was a bit of a battle between these buyers and sellers yesterday. So sellers became active, and the good thing it is that buyers still managed to hold the market in positive territory totally. So overall, it was a healthy session, as I mentioned. Even though there was some late selling momentum and selling pressure was there. And if we take the sectors, the strongest sector yesterday was healthcare, and financial services, private banks, capital goods, realty, and the banks. As I mentioned yesterday only, the sectors saw good buying interest and helped support the overall market. So, on the other hand, IT, auto stocks didn't perform as well. Uh, they remain under pressure for most of the session and ended as a bit weaker sector yesterday. And honestly, if you take the IT, the weakness in IT wasn't really surprising. We are seeing this movement from the past more than 1 week. So entire market was waiting for one big event, which was TCS quarter 1 results after the market, which was around announced after market hours, which was post 3:30, and many traders prefer to stay cautious because of this instead of actually taking fresh positions before the earnings and their announcements, TCS announcements. So now the TCS results are out. They could have a big impact not just on TCS but on the entire IT sector in whole today's session. And let's see what TCS reported and what it could mean for the market today and the IT sector today. So we should actually look at what institutional investors are doing and what they did yesterday. Domestic institutional investors or DI continued to support the market yesterday. They were not. They were actually net buyers, purchasing shares worth 1,285 crores. On the other hand, if you take FII, where slight net buyers selling shares worth 335 crores. So even though foreign investors were little cautious, domestic institutions continued to put money into the market. So that's definitely a positive sign because it shows that local investors still have some confidence in the market. So if we take the global market, a lot of things happened overnight, and these developments could influence how our market running today, how our market's movement will be. So if we take the US market, it was a strong session on Wall Street. Dow Jones closed higher by 0.27%, and the S&P gained 0.81%, and the biggest winner was Nasdaq, which was jumped 1.3%. So the main reason behind this rally was strong buying in technology and also semiconductors and AI related stocks. So investors were like optimistic about the growth of this AI, artificial intelligence, and that led to sharp rally in several chip makers and major tech companies. So actually, this is kind of important for us because whenever the Nasdaq performs well, it usually creates some positive sentiment for the Indian IT sector as well. And so after yesterday's cautious trading ahead of this TCS results, IT stocks could be in a focus gain today. So overall, if we take the global cues from the US are like kind of positive, and they are likely to support the sentiment as the Indian market movements. So, after such a strong rally in the US, you would normally expect the movement to continue. So, but this morning, US futures were actually looking a little cautious, little bit cautious today in the morning, and S&P futures like are down by around 0.14%, while Dow futures are slightly lower, around 0.06%. It's not a major negative signal. It simply looks like some traders are taking a short pause after yesterday's rally and also some booking some profits. So that's pretty normal after a strong move which happened yesterday. But the real action this morning is happening in the Asian markets, which is Japan's Nikkei is trading higher by around 2.27%, which is a very strong gain. So, and the biggest surprise is Kospi, South Korea's Kospi, which is surged more than 4.2%. That's a massive move for a major global index. So, you might be having these questions why it's happening and what's driving this rally. So, it's the same story we saw overnight in the US, which is investors are pouring money in technology and the semiconductors and AI related companies. So, since both Japan and South Korea have several large chip makers and technology companies, as we know, they are benefiting the most from the global AI optimism. So, overall, if we take the mood across all the Asian markets, is very positive this morning, and that's a good sign for Indian equities as well. So if these global cues remain stable until our market goes in the mid market, that they could provide a strong support to Nifty and improve overall investor sentiment at the today's session. Let's talk about the geopolitical situation. As I always tell, I like to give you a complete picture, both the positive and also the risk. Overnight, reports say that the United States carried out fresh airstrikes on Iran, and in response, Iran also launched the attacks targeting US linked positions in the Middle East. So, because of these fresh developments, there is a growing concern that's actually fragile ceasefire efforts in this region could actually come under pressure. So this is still a developing story, and it's something traders will be watching closely throughout the whole day. And any major update or escalation can change market sentiment very quickly. So, whenever there is a tension in the Middle East, the first thing everyone check is crude oil prices. Interestingly, despite the latest developments, crude oil hasn't seen a big spike. It currently trading around $76.30 to $76.50 per barrel, so which is almost flat compared to yesterday's. And the reason is that the market is still expecting some conflict to remain limited, and not affect actual oil production or its supply. So for now, traders are staying calm instead of reacting so aggressively. And if the situation becomes more serious, or then the fresh attacks then that threaten oil supply routes, crude oil prices can move sharply higher than within a minute. So if crude jumps, it could put pressure on the Indian markets, especially sectors like aviation, paints, chemicals, and oil marketing companies like HPCL and BPCL, because higher crude increase their input costs very so much. Apart from that, US 10-year Treasury yield is trading around 4.54%, almost unchanged from yesterday, and there is no major concern from the bond market at that moment. So if we take gold and silver, like are both trading slightly lower, which is down by 0.3%. So it's only a small decline, so nothing significant. But will continue to keep an eye on how these commodities move during the whole day. So overall, if global equity markets are giving positive signals, geopolitical situation remains the biggest risk. The biggest risk, like that's a factor to watch the today's market. So one major headline can quickly change the market mood. So traders actually should stay alert.
ಇದು ಚಾರ್ಜರ್ ಕೊಟ್ಟಿದ್ದಾರಾ
So now the big question everyone has this morning is about the gap ups and gap downs. So actually, today's opening was kind of positive. So Nifty opened at 24,124.70. It's actually gained 162 points or 0.68%. But what's even more encouraging is that the buying didn't stop after the opening bell. So with the first few minutes, Nifty moved even higher and is now trading around 24,162 up nearly by 201 points, which is gain of about 0.84%. Also, the same strength is also visible in the Sensex. It has opened around 77,395, which is 653 points, has now extended its gain nearly 77,443, which is about 7 or 2 points higher than yesterday's close. So this is a very positive start to the day. Many times we see the market open with a gap up and then immediately give up those gains. But today, at least in the early part of this session, buyers are still in control. The market isn't just holding the gap up, it's actually building on it. So, you guys be having this. Why are we seeing such strong buying today? Okay. There are actually some few important reasons behind it because for this gap ups, the biggest reason is that the global market sentiment has improved compared to yesterday's concerns. Investors are now believe that the US Iran situation may not escalate immediately, and that's has brought some relief across the whole global markets. As a result, Wall Street closed higher overnight, as we discussed, with technology and semiconductor stocks leading the rally. That positive move didn't stop in the US. It carried over into the whole Asia as well. So this morning, Japan Nikkei is close to 2%. South Korea's Kospi is trading more than 3%, and the Kosdaq, which is has a strong technology focus, has surged by nearly 5%. So that's a very strong rally across Asian markets, and naturally, Indian markets are also benefiting from this positive global momentum. So today's rally isn't being driven by just one factor. It's whole combination of improving global sentiment, strong performance in US and Asian markets, stable crude oil prices, and encouraging corporate earnings. That is keeping buyers active right from the opening bell. So one key thing to watch is whether the market can hold these gains throughout the day, or if profit booking starts near higher levels. That's what traders should keep an eye in the next coming hours. So as we discussed, one of the domestic triggers, which is TCS quarter one results, and the market's reaction is very clear. The IT sector is leading today's rally, and Nifty IT index is really already up by around 3%, making it one of the best performing sector in the today's session, which is IT. Among the top gainers, we have Tech Mahindra, HCL Tech, and TCS, all trading with the strong gains in the early trade. So the same reason it calls comes down to the TCS result, which announced after market hours yesterday. So the company reported steady profit growth, healthy revenue growth, maintainable stable margins, announced an interim dividend of 12 rupees per share. So and also shared positive updates about their new AI transformation deals and their future business opportunities. So these results have given some investors confidence that the IT sector may be stabilizing after a week continuous 2 weeks phase. So you should remember that TCS had already fallen sharply over the past few months and also was trading near multi-year low before these results which came yesterday. So because expectations were quietly low, and these steady numbers have triggered a strong relief rally yesterday. So we are seeing both short covering from traders who had been bet against this stock and fresh buying from investors who believed that worst may be behind us. So it's not just the IT sector that's doing well. The broader market is also participating in today's rally. The Nifty Mid Cap Index is higher by 0.7%, while Nifty Small Cap Index is almost also like nearly 0.6%, which is near. That's actually a healthy sign because yeah, I was talking about the Nifty Mid Cap Index and the Nifty Small Cap Index, which is actually nearly trading 0.7% higher by 0.7% and 0.6%. And it's actually a healthy sign because it tells us the buying isn't limited to just a few large cap stocks. Money is flowing into different sectors and different parts of the market, which is usually indicates stronger overall market sentiment. So the Indian rupee, if we take the Indian rupee, the head of the news, the rupee has opened slightly stronger at around 95.29 against the US dollar. So compared with yesterday's close of which was 95.39. The main reason is that crude oil prices have remained stable, which reduces pressure on this India's import bill, and a stronger rupee is generally seen as a positive for the economy, especially for companies that depend heavily on these imports. So as of now, the domestic and global cues are supporting the market, and investors are starting the day on a positive note. The key question is whether this momentum can continue through the rest of the trading session, or if profit booking emerge at these higher levels. So let's move on to the one of the favorite parts of everyone, which is open interest data, because this is where we get an idea, like where traders are building fresh positions, which stock could stay active during the day. So at the top of the list, one is Dixon Technologies, with an open interest increase of 4.82%, the highest among today's stock actually, which is Dixon Technologies. This clearly shows that the traders are actively buying positions in Dixon, the entire EMS and electronics. And the EMS and electronics manufacturing spaces, including this Canis Technology and Amber Enterprises, has been showing some strong momentum recently, and Dixon continues to lead that pack. So, if this buying momentum continues, Dixon could remain one of the stocks to watch throughout today's session. So coming to the second one is yeah, the Nifty itself, and open interest has increased by 4.77%. It's actually quite significant. So considering everything's that happened today, from this TCS earnings and global market strength to this geopolitical development, so it's clear that traders have built large positions in the index ahead of this today's session. And also, you should this keep in your mind, higher open interest generally tell us that market participation is increasing. So, and today's trading could remain active with the good values. The next one is Havells India with an open interest increase of around 2.75%. The consumer electrical and durable sector has been showing steady strength. So this is the stock which is definitely worth keeping on your eye. So one stock which actually deserves extra attention today is which is Dr. Reddy's Laboratories. Its open interest has increased around 2.21%, but I should remember that the stock fell sharply in the previous session after concerns which is related to its semaglutide business. So when the stocks falls sharply and open interest rise at the same time, it usually indicates that the fresh positions are being created there. So whenever these are like aggressive short positions or investors. Either way, expect higher than normal volatility in this Dr. Reddy's today. So if you are trading it, make sure you have to manage your risk very carefully. And the next is Kalyan Jewelers, where open interest has risen by 1.74%. The jewelry sector has been performing very well recently with stocks like Titan, Senco Gold, and Tangamail Jewelry and Kalyan Jewelers. So attracting good buying interest as long as the momentum continues. Kalyan remains an important stocks to watch. Apart from this, we are also seeing some steady open interest build up in this Federal Bank, Lotus Labs, DLF, Page Industries, and Oracle Financial Services Software. These may not be grabbing all the headlines, but they could still see increased activity during this whole today's session. So finally, looking at this Bank Nifty, open interest has increased by 0.68%. after yesterday's strong performance and today's positive opening. And banking stocks continue to attract trader interest. And so overall, if we take today's open interest data suggests that the participation is broad based. Traders aren't focused on just single sector. Positions are being built in across different like IT, banking, healthcare, consumer, real estate, and this manufacturing. This usually a healthy sign for the market, and this indicates that today's session could continue to remain active with good trading opportunities. So, if we look at the other side of the picture, we discuss about the open interest increase and some stocks where open interest is actually falling. This this is very interesting because it helps us understand what kind of buying we are seeing in the market, right? So across many IT stocks, price are moving up, but open interest is coming down. Now, what does that mean? So, in simple words, it usually means short covering. Earlier, many traders were expecting these stocks to fall, so they had taken short positions. But after the positive TCS results, those traders are like rushing to close their positions, which pushes the stock prices higher. The important thing to understand is that short covering and fresh buying are not exactly the same. Short covering can create a sharp rally, but for the rally to continue over the next few days, we need fresh buyers to enter the market as well in short covering. So if we take some few examples, LTI Mindtree has the biggest fall in this OI today, which is down around 1.19%. And yeah, TCS itself, it's also seeing some decline of around 0.67% in OI. That's completely normal because today is an earnings day and a lot of traders are like closing or adjusting their derivative positions. And in fact, more than 1.17 lakh contracts have already been traded, showing very high participation here. And apart from that, KFIN Technologies, and Cummins India and CDSL are also like seeing a slight decline in this Y. And among the larger IT names, which is Wipro, HCL Tech, and Coforge, they're also witnessing some OI like unwinding. And what's interesting is that some of these same stocks are also among today's top gainers. So if you just only look at the price, you think there is aggressive buying happening. But when you combine the price with the OI data, it tells you a different story. At that moment, a large part of the rally appears to be driven by this short covering, not by just long positions. And that doesn't mean the rally is weak. It simply means traders should keep an eye on the whether new buying comes in during the day, and if fresh long don't support these higher levels, we could see some profit booking later in this session. So, if we consider right now, the overall market setup remains positive for now. The indices have opened with a strong gap up and are continue to trade higher, and IT sector is also leading the rally. supported by this TCS earnings and strong short covering. And the broader market is also participating with both mid cap and small cap stocks trading in the green, which is another healthy sign. So today's session, keep a close watch on this Dixon Technologies and broader EMS sectors as they continue to show some strong momentum, and also the Kalyan Jewelers and other jewelry stocks like DLF. DLF is the real estate space, and Dr. Reddy's Laboratories, where the volatility is actually expected to remain high today in Dr. Reddy Laboratories. And just don't ignore the news flows. Even though the market is focusing on these earnings and positive global cues right now, the US-Iran geopolitical situation is still an important risk. So any major headline during this market has could quickly change market sentiment. So for now, enjoy the market positive sentiment, momentum, but stay disciplined, manage your risk, and let the price action guide your trades rather than just your emotions. So, as I mentioned, the positive movement is there, which is actually continuing in the Asian markets where Japan and South Korea, other major indices also traded sharply higher. So, when all these factors come together, a strong opening in India becomes quite natural. So, And if you take the IT, HCL Tech, TCS, Tech Mahindra are among the today's top gainers, while the Nifty IT index has gained nearly like 3% in the early trade. And the reason is straightforward, as I mentioned, which is like TCS announced its quarterly results after yesterday's close, and it has reported that the early profit, healthy profit growth, and strong revenue growth, stable operating margins. Also, the dividend of this 12 rupees per share also spoke positively about its growing AI business and their new transformation upcoming deals. So investors had gone into these results with fairly low expectations because TCS has already corrected sharply over the past few months. Since the results were not better than for feared, traders who had short positions started exiting them, so creating a strong relief rally across this whole IT sector. So this is also supported by today's derivatives data. Even though TCS shares are rising, its open interest has fallen, which is, tells us that the move is being driven. Actually, I mentioned it's by its short covering rather than just aggressive fresh buying. So also this Kalyan Jewelers, just keep your eye here. It's continue to attract buying, delivering an excellent business update. It has reported that it has impressive international performance during this June quarter, which is Kalyan Jewelers. Those numbers have boosted investor confidence, and today's increase in OI suggests that traders continue to expect further upside in this Kalyan Jewelers. Also, Swiggy gained sharply after positive expectations around its upcoming quarterly results and changes in its shareholding pattern. Vedanta Oil and Gas rallied following a favorable court ruling, and PC Jubilee extended its gains after announcing further progress in their reducing its bet. As I mentioned, this page industries, Oil India, Astral Polycap, APL Apollo, and Havels and KPI Tech showed relatively a weaker price and this action. It will be important to see whether buyers step in during the day or if that weekend continues. So, as I mentioned, the overall market is being supported by these positive global cues, easing these geopolitical concerns, stable crude oil prices, and encouraging these TCS earnings. Among individual stocks like Dixon Technologies, TCS, Kalyan Jewelers, and the broader IT sector, remains the key names to watch. While this Dr. Reddy stands out of as the biggest high volatility stocks on this today. And always remember one thing, which is news creates the gap, but price action decides whether the gap continues or get filled or turns into profit booking. So keep watching both the headlines and the charts before making any trading decisions. So, as I always mention, whatever we are discussing today, whatever we are having, it's completely educational and informational purposes only. For your financial decisions, contact your advisor and experienced advisor who is knowledge person before taking any trading decisions. So, if you are holding any position, if you are taken any trade and currently you are in a trade, Just let me know in the comment section, or if you have any doubts, we'll analyze that particular stocks together. Just let me know if you have certain doubts about certain stocks.
Good morning, everyone. Welcome to today's market analysis. Let's dive straight into what Nifty 50 is doing right now. We got exact buy signal at 9:24. So, we would have captured around 54 points. So, currently, market is trading near a strong supply zone. So if we look at technicals, we need to wait for how price reacts in the zone. So price has given us a strong bearish candlestick patterns. We saw this candle low being break. We need to wait for the close to check the sellers are aggressive here. So we have so we can if this price goes below this, then we can look how price reacts. So we'll just confirm this with option chain data. So currently Nifty is at 24,194, up by a solid 232 points, which is over 0.97% gain for the day. The market is showing very strong bullish momentum. So we'll just look at the broader market sentiment. So India VIX is at 12.47, where we can see that it is down by minus 0.89. So falling VIX during a market rally is highly encouraging because it shows that market volatility is cooling down, giving buyers more confident. So when we look at the put call ratio, it stands at 1.154. So and the overall PCR is at 1.2291. PCR above 1 clearly indicates that more puts are being written than the calls, which is traditionally a very bullish indicator. So the data strongly supports this upward trend. So if we look at key supports and resistance level, let's pinpoint where the major battlefield is between the bulls and bears. So the max pain is at 24,200. So this is a strike price where option buyers face maximum loss, and it acts like a strong magnet for the index. So if we had to mark 24,200 level, we have exactly at this zone. So this is the max pain level. So and the spot money is right above the 24,200 level. This orange line indicates where the current market spot is trading at. So this strike price is where option buyers will face the this means 24,200 is going to act as a crucial immediate support level for the rest of the season. So once you see a strong candle close above this level, so we can since the trend is in uptrend, we have a strong supply over here. But as we saw, there was a minor structure shift in the entire market. We could see that there was a break. So market break this high and opened above this. We saw a strong gap up today. So indicating we can anticipate a momentum continuation. Uh, Anticipating that this would break. So as we told, we didn't still see the 15 minutes candle below this level. So we need to wait for the confirmation. So if there is a rejection in this line which we have marked, if the price struggles to close below this candle, then still there is a strong buying momentum indicated. So 24,200 is a very crucial line. We need to wait for the price to close above that level to confirm that the buying momentum is still sustained. So let's break what big institutional players are doing by looking at the open interest OI bars. So look closely where the 24,200 strike is and the levels below it, 2400, 150. We are seeing massive green bars, right? So 24 150, 24 200 is the first support level. 24 once the price closes above this, 24 200 would be at immediate support level. 24 150 is the next support level. 100 and 24,000 is the final support level for today's session. So if we had to mark these levels, we can mark it as. So these are our support levels. So these have massive green bars with solid green indicating existing put OI and diagonal lines indicating fresh put writing OI increased today. So we can see that today's OI at 24,200 strike has increased by 1.53 crores, where call OI has just increased by 53.74 lakhs. And if we look at this 24 150 strike, the price has increased by 1.20 crore, where call OI is just increased by 35.64 lakhs. So on the for if we had to look for bearish resistance on the right side of the spot, look at 24 300 strike. So which is at which we see there is increase in 17.40 lakhs. The total call OI stands at 1.4 crore. So if we had to mark this as resistance, we could 24 300. If we look in the chart, I will just mark the 24 300 level. So this would be our immediate major resistance level. Once we cross about 24 200, so these are the support and resistance which we identified using call OI. So right now the immediate trading range is defined by the highest OI concentration is tightly locked between 24,200 as a strong support and 24 300 as the immediate heavy resistance. So if you look at the global sentiment impact, this market rally isn't happening in a vacuum. So if we check the latest news feed on the right, it perfectly aligns with our chart. So you can see this. The Indian market witnessed a strong rally today with the Sensex gaining over 500 points, responding very positively to latest economic data. And also, if we look at the tech stocks, which led a massive charge overnight. So, with the Nasdaq hitting a new record high, and this strong global tech momentum is giving a great tailwind to our domestic IT and heavyweight stocks today. So, to summarize our game plan for next few hours, because the spot is hovering right at 24 to 210 and 211, just above the max screen, and we saw heavy put writing zones of 24,200. So we might see a quick retest of 24 150, but looking at the aggressive put writing, the downside seems limited for now. So keep eye on premium DK and PCR, stay disciplined, manage your risk, and let's see how European opening impacts us later. So if the price stays above this level, then we can potentially see this supply zone getting broken. So once you see the close above this level, then you can there is high chance of price to moving till 24,300. If price fails to close above this level, then you can look for this level first, 24,150. Since there is heavy put writing, there is a chances of price retesting this zone and closing this level as well. So this would be the analysis for Nifty. So let me know if you have any doubts related to Nifty, and let me know your views in the comments as well. So in few minutes, we'll also look at Bank Nifty in the same way, and just look how the option chain of Bank Nifty is performing. Yeah, so moving on to Bank Nifty, yesterday we had marked these levels. So we had told that if the price breaks above this level, then the price can move up to 58,000. And that's what it has happened today. Price opened above this level. We saw a gap up today, and we saw price moving to the 58,000 level. So this was yesterday's level, which we gave in our live. You can also go and check. So we had also told yesterday that if price breaks below this level, then there is high chances of price to go till 56,500. So since there was a consolidation yesterday, we did see breaks on both the side. So yesterday the price traded in the range. So today we see the price is heading towards 58,000. And if we look at the chart, if we look at the zones here, we see the zone has been there. There was a supply zone here, so we see a zone price closing above that. So we'll also kind of confirm with the uh, option chain interest. So before we dive into the data, please note that this analysis is strictly for educational purpose and live market study. So option trading involves high risk and open interest data changes dynamically throughout the day. So always do your own research or consult a financial advisor before taking any trades. So yeah, let's move to the data. So Bank Nifty is currently trading at 973, which is up by 719 points, around 1.29%. So the bulls are clearly in the control of the intraday momentum today. So if you look at the volatility index, we can see it stands at 12.43, which is down by 0.93. A cooling or a stable VIX alongside a rising market means there is no panic. This up move is steady and structured. So if you look at the put call ratio, the overall PCR is at 0.9197 and today's PCR shows at 0.933. So this indicates a fairly balanced but slightly cautious sentiment. It's approaching the one mark, meaning put writers are starting to build position aggressively to catch up the market rally. So to break down the open interest bar chart to find our major make or break zones for the next couple of hours. So if we look at the chart, we see 58,000 as the major level. So we have a strong red bar, meaning that we have a strong resistance in 58,000 level. So even though Bank Nifty is trading just a fraction away at 57,949, call writers at 58,000 are holding their ground strongly. So notice that green hatched area next to it. There is a significant put building happening at 58,000 as well. So this means a massive tug of war is happening right here. So if Bank Nifty decisively breaks and sustains above 58,000, these call writers will get trapped, leading to a massive short covering rally that could easily push us higher. So yeah. So when price is approaching this level, just look for the call open interest that this stripe hatched bar increase. So if they are increasing, then resistance is getting strong. So if you see a hollow blocks like you see in 57,500, then call writers are unwinding that position. So this is how you can validate 58,000 level. So if price closes above 58,000 and even though the price closes above 58,000 and the red bar is not getting the open interest aren't decreasing, and if you see more open interest contracts opening in call OI bar, then it might be a fake move, fake breakout. So this is how you need to find the breakouts. So if you look at the intraday support, we have 57,500 and 57,000 as a strong intraday support. So we see 500 as a strong intraday and 7 and 57,000 as another strong intraday support. So we can see the put writers are starting to cover their positions. You can see a hollow block in the call OI bar. It means that they are very confident that the market won't go below 57,500 and 57,000. They anticipate that the market will likely to stay above these levels. So 57,800 would be our strongest support. So we have also marked this level yesterday. So that's what we told. Once we see a break above this level, then easily the price will reach 58,000. So if bulls manage to clear the 58,000 hurdle, the next big cluster of call OI isn't until 58,500. So we can see there is no call OI buildup. So we have a strong resistance in 57,500. So once you see a strong breakout above this level, then this zone acts as a strong resistance. So our max pain is currently at 58,000. So for those who are new to the stream, max pain is a strike price where option buyers would lose the maximum amount of money if the options expire right now. So the market tends to gravitate towards this number. The fact that max pain is sitting right 58,000 perfectly aligns with our OI chart showing 58,000 as the ultimate magnet and point of convergence for the day. So right now at 57,950, we are sitting right under the dragon's nose. So avoid rushing into fresh heavy call buying exactly at this level. Span Nifty clocks a 15 minutes candle close above 58,050 and the red bars at 58,000 starts shrinking. And that's what we discussed as call unwinding. That is your cue. We could see a shift towards move towards 58,200 and 58,300 as we don't have a strong resistance until 58,500. So keep refreshing this screen on your browser every 10 to 15 minutes to see if the red bar is at 58,000 is going down or getting taller. So if it gets taller, the market will face a hard time crossing 58,000. So as I said before, this analysis is strictly for educational purpose and live market study. So option trading involves high risk and open interest data changes dynamically throughout the day. Always do your own research or consult the financial advisor before taking any trades. Yeah. So here the analysis would be wait for the price to go above this level. So once you see above this level, then the price will definitely move towards 58,500 level. And if you don't see close above this price, seeing giving you a consolidation and suddenly closes below this supply level, which we just broke, it regains this level, then you can see the uh, price moving towards this level again, 58,500. So this would be the plan. So wait for the close above this level, or you can also see a retest here. Sorry. You can also see a retest again in this supply zone and then break. So that would be a very strong confirmation. So this zone will now act as a demand as we broke this level. So yeah, this would be the strong. This would be the plan for today. So always do your own research or consult a financial advisor before taking any trades. This is strictly for educational purpose and live market study. So that would be the bank nifty analysis that we made using OI and OI chain. So before moving on to Sensex, we'll just look at the live data that we have received. So TCS has kicked off the Q1 corporate earnings season yesterday evening by reporting a solid 4.61% year-on-year increase in its consolidated net profit to 13.349 crore. So if we exclude exceptional items, that net profit growth actually jumps to a massive 8.5% year on year to 13,849 crore. So the IT sector has been under pressure due to global macro concerns. But TCS CEO Krithivasan dropped highly optimistic guidance statement. He explicitly stated that despite geopolitical hiccups, they expect a significant demand resumption heading into quarter two because clients are sitting on a massive pent up technology backlog. So this single update has triggered an aggressive early morning buying spree across IT heavyweights, providing a direct thrust to the benchmark indices. So if we look at today's heavyweight earnings pipeline, so we have packed a lineup of major companies slated to drop the June. Yeah, so key stocks to watch for sudden intraday volatility, including L&T Finance, Indian Bank, Bank of Maharashtra, Elecon Engineering, and Just Air. So if you are trading banking options or stock futures, keep these names on your watch list as the result will hit the buyers soon. So giants like Nestle India, Hindalco Industries, Dr. Reddy Laboratories, JK Cement, and Apollo Tires are all trading XTB today. So Gold DM International executing a 1:3 bonus share issue today. Make sure to factor these corporate adjustments into specific stocks, option pricing, and structural support lines. So domestic institutional investors continue to act as the heavy backbone of this market rally, pumping a massive net buying value of 1,285.25 crore in the cash segment. So on the flip side, foreign institutional investors remain minor net sellers, pulling out roughly 334.72 crores. So the fact that our market is surging today means domestic liquidity and the blockbuster TCS guidance have completely overwhelmed minor FII selling. So while the domestic sentiment is heavy bullish, we must keep one eye on global cues as well. So global analysts are tracking ongoing headline noise regarding military exchange between the US and Iran. So it hasn't dented Indian sentiment today because of the local earnings boom, but it is keeping the broader global market slightly alert if crude oil or global gift equity suddenly moves. This will be the underlying reason. So basically, today's session is it's an earnings driven IT led bullish structure today. So we'll now look at the Sensex option chain analysis and mark those levels as we did for Bank Nifty and Nifty to understand how Sensex will perform. We'll just move on to Sensex. So Sensex is holding on to excellent gains, trading at 77,529, up by 788 points. So just like Bank Nifty and broader market sentiment here is strongly positive today. So volatility is staying calm at 12.44, giving option sellers a stable environment and showing a lack of fear in this rally. So if you look at the PCR, PCR currently stands at 1.265 and the overall PCR at 1.1956. A PCR above 1.2 indicates that put writing heavily dominates the market right now. The bulls have aggressively built a floor, expecting the market to hold its gains. So the ultimate intraday floor is 77,500. We can see the max page shows at 77,500. So which is where the price is currently trading at 77,433. So we all know that this chart shows 15 minutes delay. So 77,400 is at sorry 77,500 is the immediate level. We have marked this level. So we need a exact close above this level to look at the market continuation in the upside. So even though the current spot is slightly below at 77,404, put writers are aggressively writing the 77,500 strike. They are highly confident that Sensex is going to break past and settle above 77,500 today. So the massive green bar represents an absolute rock solid support zone building up in real time. So we can see 77,500 as a strong support, 400 and 77,000 as very strong support. As we see, there is a hollow block in call away, which means that they anticipate that the price will stay above 77,000. Even 7700 is also has a hollow block. 200 has also a slight hollow block. We can see a decrease in change over call away. So price is likely to stay above 77,200. So currently it's at 400. If you look at the 77,200 level, yeah. So the immediate resistance would be at 77,600. If the price manages to stay above 77,400, we have immediate resistance at 77,600. So the reason is because you can see the call low I bar has increased around 4.50 lakhs, and major resistance is at 78,000. So if the momentum pushes cleanly past 77,600 and the major concentration of call writer is all way up at 78,000. So the space between 77,600 and 78,000 has relatively lower call resistance, meaning if a short covering move triggers, it could pick up very speedily. So we just need to wait for the price to close above this level first, and you can target this as the first target. And once the price breaks this level, then there is high possibility of price moving towards this level. So our max pin is also currently at 77,500. This perfectly aligns with our OI chart. The option data is heavily concentrated around 77,500, making it the key anchor point for the day. The market is actively trying to push and wrap itself around 77,500 level. So when we look at the bullish, we need to wait for the spot to cross 77,500 level carefully. So if we see a decisive 15 minutes candle body closing above 77,500, those call rates at 77,500 and 600 will feel the heat. So that could easily trigger a quick move towards 750 and 77,800. So with PCR of 1.265, underlying bias is solidly buys on dips. Any major retracement towards 77,300, 200, where we see secondary put support, should be treated as a potential long opportunity with a strict stop loss. So keep an eye on the screen. If that massive green bar at 77,500 keeps growing, it means Bulls are locked and loaded for a strong closing session. So this would be the analysis on Sensex. So if you look at the technical chart, we are currently trading at the strong supply zone level. So that's the reason we see a slight reaction here. So once we see a strong close above the 77,600 level, then we could potentially target 78,000 would be the next high for the session. So, yeah, before we move on, a quick reminder that this analysis is strictly for informational and educational purpose during market hours. Option traders carry substantial risk and OI data updates dynamically. So, please manage your risk carefully. So, if we look at the upcoming events, so if you're seeing wild or unexpected gaps in specific individual stock chart, do not panic. Today is a major corporate action day. So major index heavyweights are trading ex-dividend today. Keep a close eye on price adjustments in Nestle India, Hindelco Industry, Doctors Reddy Lab, and JK Cements and Apollo Tires. So Galdium International is trading ex-bonus today following their Manish to 3 bonus share allotment. So keep these news in your mind and have these stocks in your watch list as well. So as we head into the second half of the trading session and prepare for next week, keep these vital data on your radar. So when if you look at the banking data later today, India will be releasing its official yearly bank loan and deposit growth data for June 2026. So this will directly impact bank nifty heavyweights like HDFC Bank and ICICI Bank. So global, if you look at the global macro data, watch out for international data hitting the wires later. This afternoon, specifically France inflation data and Canada's unemployment data, which will dictate global currency and dollar index direction. So always also keep eye on that. And if you look at the quarter one earnings season, the corporate earnings floodgated are now officially open. So over the coming days, results from banking, heavyweights, and major infrastructure players will dictate the structural trend of Nifty 50. So the technical breakout currently is heavily supported by IT earnings and cooling geopolitical climate. Beyond dips and dominant flavor of the session as long as Nifty holds about 24,000. So yeah, we have just analyzed all the index Nifty, Bank Nifty, and Sensex. So let us know if you have any queries regarding this. Drop your views on comments. We'll try to answer your questions as well.
Hi guys, welcome back. Now just we'll jump into midday market news and updates what we have right now. There has been a lot of happening since the opening bell. So in this update, we'll go through the market step by step. We'll look at which sectors are leading and which one are lagging. The top stocks to keep your on your radar and key news that actually driving today's action. So let's see how the market is performing currently right now. So as of now, Nifty is trading around 24,180, gaining almost 0.9% over yesterday's close. And at first glance, that looks a strong day. But if you look a little bit deeper, you'll notice something even more encouraging. So today's rally isn't limited to just one handful of large cap stocks. The buying is spread across the market, and Nifty is up by more than Nifty next 50 is up more than 1%, showing that large companies outside the Nifty 50 are also participating. And the mid cap indices are looking quietly strong. The Nifty mid cap 50, mid cap 100, and mid cap 150 are all trading close to or kind of above 1% gains, which tell us investors are actively buying quality like mid cap stocks. But the biggest surprise today is small cap space. Small cap is the best performing major index so far, gaining almost 1.4%. So whenever we see large caps, mid caps, and small caps all moving higher together, it's generally considered a healthy market because the buying isn't concentrated in just few heavyweight stocks. It's broad-based participation. So that actually tell us today's strength is visible across almost every segment of the market. So if we summarize the first half of the today's session in one sentence, this is a broad-based rally, not just an index-driven rally. Money is flowing into large caps, mid caps, and small caps, even caps, which is a positive sign for overall market sentiment. So you might be wondering why I'm telling all about this indices instead of just talking about where the Nifty is, because that's where the real story is today. If you look closely, almost every broader market index is actually outperforming the Nifty 50. So the mid cap, small cap, and even micro cap indices are all gaining more than the benchmark index, and that's a very healthy sign if you consider. Today's rally isn't just being driven by just a handful of heavyweight stocks like Reliance or HDFC Bank. Instead, money is flowing across the market. So, small cap stock are performing even better than large caps, which tell us the investors are becoming more confident and also they are willing to take on a little more risk. So when we see these kind of broad participation, it usually means the market strength is more kind of genuine. So it's not just institutional money buying a few blue chip stocks. Domestic investors and retail participants are also actively putting money into these different sectors and different market cap categories. So this exactly what we like to see during this healthy rally which is going on today. So, of course, it doesn't guarantee that the market will continue moving higher every single day, but it does tell that Today's buying is well spread out instead of being concentrated in just a few names. So just keep that bigger picture in your mind as we move ahead. So we'll talk about the heat map, where the money is actually flowing, in which sector the money is flowing. We'll first look at the three strongest sectors of the day, identify the top three stocks from each sector, and most importantly, understand why they are moving in that way, why they are in top three. After that, we'll also recover the three weakest sectors that stocks dragging them lower, and the key news or the triggers behind their those moves. Because in this market, it's not enough to know what is moving. You should actually get to know, also know why it's moving. That's what help you make better trading and better investing decisions. So let's just move on the top performer sectors, top three per sectors who's outperforming. One is metal. Metal sector is like clearly stealing the spotlight today. It's best performing sector on the broad, with several metal stocks gaining as much as 3 to 4% during this session. So the three stocks you should just keep your in your wish list are: one is Tata Steel and Zindal, JSW Steel, and Hindalco Industries. So you might be wondering, why is the metal sector suddenly so strong? This is a usual and common question. So there are actually a couple of reasons. The first reason is improvement in the gold market sentiment. So after the strong rally in the US markets and positive Asian cues, which we discussed in the morning, investors are becoming more comfortable taking exposure to their cyclical sectors like metals. So second one is, many of these stocks had corrected quite a bit over this past few weeks due to their concerns about global growth. So after such a correction, we are now seeing the bargain buying coming back into that sectors in this metal. And another small positive is that crude oil prices have remained stable while the Indian rupee has strengthened slightly. So that improves overall sentiment for the companies that depend on these important raw materials. So among all these three, Tata Steel will be an important stocks to watch. If it manages to break above its nearby resistance level in a good value, it could lift the entire metal sector like more higher. At the same time, JSW Steel and Hindalco are also showing some healthy buying interest. And these the three stocks usually move together whenever the metal sector becomes a bit active. So we better just keep your eye here. And the second one who's outperforming is IT, actually the second strong performer for the day. This isn't a surprise after everything we have discussed since the morning. The three biggest stocks to watch are TCS, Tech Mahindra, and HCL Tech. In fact, these stocks are not just the leading IT sector, they are among the top gainers in the entire Nifty 50 today. So, the biggest reason is, of course, we know the TCS quarterly earnings. It has reported that a healthy revenue and announced it interim dividend of that 12 rupee share, that news, and also positive commentary about this business outlook, and also the AI news. So one sentiment statement from the management stood out. They mentioned that while demand has been affected by the geopolitical situation during this quarter, they expect business actively to improve going forward. That has actually given investors confidence that the slowdown in IT sector may not last as long many had feared. So also you should remember TCS has already fallen sharply before these results. So expectations were quite low when the results turn out better than expected. Traders who had short positions rushed to cover them, creating a strong relief rally across the entire IT sector. That's why we are seeing Nifty IT index like jump nearly 3% today. And that's not just the large cap companies, mid-sized IT firms like Zensa Technologies and Newgen Technology Software are also trading like strongly, showing that the today's buying is spread across the sector rather than just being limited to one or two companies. So third sector is consumer durables. As I mentioned, you should just keep your eye on this Dixon Technologies, Havels India, and Voltas. And like metals or IT, this sector is being supported by a long-term growth story. So if you take this Dixon Technologies, it's continues to benefit from the strong momentum in this EMS, which I mentioned in the morning. It also seen one of the highest increase in OI today, so showing that the traders could continue to build fresh positions here. That tell us confidence in the sector remains very strong. And Havels India, if we take, which is seeing steady buying as investor remain positive on this electrical equipment, also this consumer appliances companies. Also, Voltas is like trading well. Investors are optimistic about consumer demand improving over the coming months, especially with the festive season gradually like approaching in coming days. Overall, if we take the consumer durable sectors continues to benefit from the broader manufacturing, also their electronics theme that's been gaining momentum in this Indian market. So these are the three sectors in the actually strongest sectors in the today's session. Let's just switch to the other part of the story, which is underperformers. So just because market is green doesn't mean every sector moves higher together. Today's market is a great example of money rotating from one sector to another. So in the underperformer list, the first one will be this pharma and healthcare, which was actually a good performer last week. The weakest sector on the today's heat map is that's what pharma and healthcare. So here I'm just taking Dr. Reddy Laboratories and Max Healthcare and Sun Pharma. So if you take the Dr. Reddy's, the stock is still reacting to the yesterday's announcement about the delay in this commercial supplies of its semaglutide, that product due to their API quality issues. The company has clarified that there are no patient safety concerns and the existing regulatory approvals remain unaffected. However, investors are worried about delays in commercial supplies, which is why the stock remains under pressure even like today about the yesterday's news. So it was one of the yesterday's biggest losers, and despite a small recovery attempt, it's still among today's weaker performer. So if you take the Max Healthcare and Sun Pharma, interestingly, both these stocks had like performed quite well over the last few sessions. In fact, Sun Pharma was one of the top gainers just yesterday. So suddenly, what might happens to happen? Like this looks like profit booking than just fresh negative news. After a good rally, some investors are booking profits and shifting that money into sectors like are showing stronger momentum, like metals and IT. So that's perfectly normal because this is a sector rotation and it's something we regularly see in this healthy bull markets. So at this point, I wouldn't read today's weakness in pharma and as a major warning sign. It looks more like a money moving from one pocket of the market to another. The another one here in the underperformer list is FMCG. Here, Marico, Colgate Palm Oil, and Radico Kaitham. These are among the weakest names within today's FMCG basket. There, I'm telling you again, there isn't any major company specific negative news driving these particular stocks. Instead, it's just all about market positioning. FMCG is considered as a defense sector, and when market are uncertain or falling, investors usually prefer FMCG because these business are relatively stable. But today, the market mood is completely different. Investors are willing to take more risk. They are moving money into sectors like IT, metals, consumer durables, and also the small caps, which are offering stronger momentum. As a result, defensive sectors like FMCG are naturally taking some backseat. So, if you are holding quality FMCG stocks, today's weakness shouldn't be viewed as a major concern. It's simply part of the market's normal rotation, which usually happens. So the third sector which is underperforming is telecom. The key stock to watch here is Bharti Airtel. Interestingly, Bharti Airtel is among today's biggest losers on the Nifty 50, even though it has delivered a strong rally in the previous session that tell us today's move is likely profit booking after the recent gains. So sometimes after a stock raises sharply over one or two sessions, trader prefer to lock in profits, like especially when fresh opportunities are appearing in fast moving sectors. Apart from this, Bharti Airtel, keep an eye on this Vodafone India idea and Indus Towers as well. These stocks often react to the same sector wide sentiment. Although Vodafone Idea continues to have its own separate story around this fundraising and financial restructuring. So if we put everything together, today's market is showing a very healthy pattern. Money is moving out of the defense sectors like pharma, FMCG, and telecom, and into the higher growth sectors like this metals, IT, consumer durables, and mid caps and small caps. So that's exactly what you will expect to see on the strong broad-based rally like today's. So the important thing is now to watch whether the sector rotation is continuous through the second half of the session, or whether profit booking starts appearing in the sectors that have already rallied very sharply. So before we wrap up the today's midday update, let's look at one more important development that could have a long-term impact on this Indian market. A lot of you ask me not just like about daily news, but also about the bigger picture, what themes could create opportunities over the next few years. One such theme is India's semiconductor industry. Recently, as I mentioned, Prime Minister Narendra Modi inaugurated a CG Semi's OSAT facility in Sanand, which is in Gujarat. So now OS80 simply stands for outsourced semiconductor assembly and test. In simple words, this is where semiconductor chips are assembled, packaged, and also tested before they are used in these electronic products. So this project has been built with a investment of more than 7,500 crores in the partnership with the Japan's Renaissance Electronics and Thailand's Stars Microelectronics. So you guys be thinking why it affects and why it's very important for the investors. Why I'm bringing this to the table, because this isn't just an isolated project. This is now the third major semiconductor facility to begin commercial production in the India. This particular year, if we take. So earlier this year, Micron Technology started its semiconductor facility, followed by Canis Semicon, and now this new plant adds even more strength to India's semiconductor ecosystem. So overall, if we take the project approved under India's semiconductor mission, represent investment worth nearly 14.7 billion US dollars. So during the inauguration, the Prime Minister also spoke about India's long-term vision of becoming a global semiconductor hub. The idea is not just to build a few factories, but to create a complete ecosystem from chip design and assembly and testing, also to packaging, and eventually chip manufacturing whole itself. So that's why places like Sanand, Gujarat, like are quickly becoming one of the biggest semiconductor and also electronic manufacturing hubs. So why you stock market investors care about this? Why it's so important thing to notice is because whenever the government strongly supports an industry through the long-term policy and their investment, companies connected to that particular theme usually receive sustained investor attention. So that's exactly why we have been seeing continued strength in these companies like Dixon and Keynes and Amber Enterprises and other like EMS related businesses. This isn't just a one day rally. It's actually part of much bigger structural growth, that it is a whole story that many investors are like closely watching right now. So if we just summarize it, as of midday, the overall market remains in the strong position. Biggest positive that isn't just a nifty rally. Buying is visible across large caps, mid caps, and small caps, even micro cap stocks, which tell us market participation is broad based. Among the sectors, metal continues to lead the gainers, supported by this improving global sentiment. Also, the bargain buying. IT remains the strong after the positive TCS earnings. Consumer durables also performing very well. Pharma, healthcare, and FMCG and telecom are relatively bit weaker today. But at this stage, the weaker appears to be largely due to the profit booking and sector rotation rather than just any major negative news triggers. The only stock specific concern that still stands out of is Dr. Reddy's Laboratories, which continues to react to the delay in this semaglutide product launch. So overall, the market mood remains positive. Global cues are supportive. Earning has started on a healthy note with TCS. Domestic participation remains strong, and investors continues to rotate in sectors showing strong growth potential. So the key thing here to watch is the second half of this whole session. Will be whether this broad-based buying continues or whether trading begin uh, profits after the today's strong opening. So also, if we look at the today's market as a whole, one thing is very clear: the money is moving towards growth-oriented sectors, like I mentioned, metal, IT, consumer durables. While defensive sectors such as FMCG, pharma are like taking a backseat. And on top of that, mid cap and small cap stocks are outperforming the large caps, which tell us investors are like comfortable taking one more risk. So generally, these kind of market setups reflects positive sentiment, and of course, that doesn't mean the market will keep moving up without any correction. Things can change quickly, especially with if we get any unexpected geopolitical headlines or negative global news during this second half of the session. So as things stands right now, the overall market structure continues to remain positive for now. So if you are trading today, keep an eye on the price action. Watch whether the strong sectors continue to hold their gains, and if fresh buying comes in during the afternoon instead of just profit booking, just keep your eye on that. That will give us a much better idea of whether today's rally has enough strength to continue into the closing bell. So we have covered everything from the broad market, sector performance, top gainers, important news triggers, and also the policy developments. So I would love to hear your thoughts. Which sector do you think has the strongest momentum going into the second half of the day, like metals, IT, or consumer durables? And do you think like today's weakness in pharma or FMCG is just the short-term profit booking? Could it continue over the next few sessions? Drop your thoughts, drop your ideas and your answers in the comments. We always read your comments and waves, and we'll try to solve them. We'll try to give them proper, suitable answers, and we love to just check or read your views and seeing how you are looking at the market. So about all these talks, by end of the market, by end of the session, by closing, we'll discuss briefly where exactly those stocks stand, where it is now we already discussed, and by end of the session, we'll discuss where those stocks that time. So I'll be back later today with the closing market updates and the new stock updates and movements, where we'll see whether today's momentum continued or whether the market saw any late or profit booking. Until then, just trade smart, manage your risk, and never invest based on any only on depending on headlines. And also, I always mention this video is meant purely for educational and informational purposes. Please do your own research or consult a qualified financial advisor before making any investment decisions. So as I mentioned, guys, I asked you guys one question, which is like, which sector like has the strongest momentum going into the second half of the day, like metal or IT or consumer durables. Let me know in the comment section what's your thought about this, and also about the pharma and FMCG. Like could it like continue or the next few sessions in the same way, like as a weaker sector? Just let me know in the comment section about your thoughts, how you're seeing the market, how you're analyzing it. And I just want to know how your analysis works. We can discuss together and conclude. So let me know in the comment section.
So yeah, we have discussed till now we have discussed all the index analysis, and we had also looked about we discussed about sectoral analysis as well. So if we look at the Nifty currently, so in the morning session we had given that Nifty, if Nifty failed to close above this level, so there are high chances that Nifty will come down to 24,150. So as discussed, Nifty came down to 150 and it has again went to 24,200. So we need to wait for proper break above this level. Also, we have an immediate supply zone above this level, so we need to wait for double break. We need to wait for the price to close above this level for more confirmation. So once we get that, we can easily target till 24 200. So yeah, so now we'll move on to commodity update. So if you are trading the MCX or keeping an eye on global inflation triggers, the commodity space is showing some very interesting cautious setup right now. So we'll just look at the live numbers now. So first we'll start with gold. Yeah. So yesterday we had marked these levels. So yesterday I told the price is currently trading in a major supply zone. So exactly price has given us a reaction in the supply zone. It started to consolidate. It failed to break above this level. So I told you if price breaks this level, then there is a high chance of moving to the next supply level. So, but price didn't break this level, and we got a sell signal here. So we would have easily captured around 0.3% in the span of 3 hours. So exactly gold had reacted to this level, and now if we look at the gold setups, we can see that. So this was a 1 hour supply level. So we could see I had marked this level in 1 hour. I'll just remove all the drawing. Yeah. So I had marked this level in 1 hour time frame. So we could see here. So price exactly reacted to this demand supply level, and we got a strong selling sell off from here. So if we look at the immediate roadblock, we have a strong demand over here. So there is high chance of price to bounce from this level. So then you can wait for price to target this area. So since when this was a demand level, so price broke this demand here. So this would react as a supply now. So once you see a reaction here, uh, look for price to reach this area. So you need to wait, and you look for a strong bearish candle setups. Then you can target. So once you see a strong bearish candles, then you can target to the till this low. Since the overall structure is in downtrend, these minor demand zone won't act as a strong bounce. This will just head towards another supply zone. So this would be the plan for gold until it respects this supply zone. So don't just tend to blindly wait for proper candlestick patterns. Once you see a price tapping this supply area, just switch it to 15 minutes time frame. Look for a proper bearish engulfing candlesticks. Then you can enter a proper. sell setup, keeping the stop loss above this level and targeting this low which I have marked. So MCX gold currently trading lower down about 0.88% to 0.5%, sitting around 1,44,21. So holding steady around $4,128 per ounce, posting a slightly intraday recovery, but still heading for a 1% weekly decline in the international spot gold. So gold is caught in a fascinating tug of war right now. Usually the recent elections and Iran Gulf would push gold higher as a safe haven, but because those tension also threaten oil and stoke global inflation fears, the market is betting the U.S. Federal Reserve might keep interest rates higher for longer. So higher rates increase the opportunity cost of holding non-yielding gold, which is keeping the upside cap today. So we have discussed all the levels to watch on gold. So keep these levels in mind. So if you have any queries on MCX gold, just let me know in the comments. Let me know if yesterday's discussion have helped you. Because yesterday exactly we had marked this zone and we got a strong sell setup and sell signal in the indicator as well. As we said, we would have gained around 0.5% within a span of 2 hours. So we'll also now move to crude. Yeah. So we had also marked levels on crude yesterday. So this was day before yesterday, which we told the price would move after a retracement from here. So after our update, price exactly went around 3%, 3.8, which is nearly 4%. So yesterday we told the price was heading towards a strong demand zone around at the same time, 2 o'clock. So yesterday I told you guys to wait and look at the price to close above this level. So I had marked this level. So wait to close above this level. So once the price closed up, I told there is a high chance of price to break this high. So exactly price went till that level. So we would have gained around 1.9%, which is nearly 2%. Okay, so let's see how current trend is moving. I'll just remove all the old drawings yesterday's. You can go check yesterday's live. We would have given all the levels yesterday. So if we look at the current crude price, the price is still in a uptrend. So this is just a minor structure shift we have got. So we have got a structure shift here. So we need to wait for price to close above this level if we are looking for long position. So long position, we need to consider long position as the pro trend is an uptrend. Downtrend is just a correction. So we need to see the price close above this level. So look at the geopolitical tension until and unless we get the positive news, we can look for long position as well. So currently it has again tapped in a demand zone here. So we need to wait for a sponsorship. So wait for the price to close above this level. So once you see this level closing, price closing above this level, then you can look for a strong. You can target this side. So first target would be this area, and second would be around this area. So these would be the levels for crude. So MCX, Brent and WTI futures is hovering near 75.60 per barrel, while the US WTI crude is trading around $71.40. So crude oil has entered a much needed cooling off period after massive rally triggered by supply chain risk and attacks in the Gulf. So we are seeing standard intraday profit booking. So these were all triggered by a strong profit booking levels. Even in the correction phase, we would have made profit from our indicator. So we would have gained around 2.14%. So if you would have taken trade in 5 minutes, we would have got around 4% on this level. So within 1 day, we could have expect 10% return if we would have taken this particular buy signal. So since we know the trend is in uptrend, if you focus on buy signals, you'll have a good high probability trade. So focus on long positions as the trend is in uptrend. So, following recent targeted US airstrikes on Iranian military assets, Iran retaliated yesterday by launching significant strikes against US military infrastructure that are situated in Gulf states. So, report also emerged of explosion near Bushehr, which houses one of Iran's nuclear power facilities. So the active exchange has severely delayed the full normal reopening of the Strait of Hormuz. For context, the single choke point handles roughly 20% of the entire world's daily gas and supply, oil and gas supply. So shipping vessels data show that transit through the strait have slowed to a crawl, with global tankers forced to use highly monitored specific lanes to avoid getting caught in crossfires. So we'll all have a question when such geopolitical tensions are happening. You could raise a question that why is oil cooling down right now? So if a critical shipping route is disrupted, why isn't crude skyrocketing now? There are two massive release valves letting the steam out of the market. So the first one is Washington's strategic approach. So first, energy traders are breathing a sign of relief because Washington has intentionally avoided striking Iran's actual oil engine. Furthermore, comments from US President Donald Trump indicating that he expects any conflict to be resolved very quickly and not turn into a prolonged regional war have dramatically reduced panic buying on the global desk. And the second one is OPEC stepping up on supply. We are seeing supply questions coming in from OPEC Plus, and Saudi Arabia has also successfully boosted its shipments to Asia, And the United Arab Emirates has restored its exports above 3.9 million barrels per day. So total flows moving outside the region are starting to recover. Plus, OPEC is expected to raise output targets by 188,000 barrels per day for August, which gives buyer assurance that a structural shortage will be averted. Yeah. So if you look at the global demand track, when we compare inflation versus the consumption, so I was talking about the comparison between the inflation versus consumption. So this is one of the big factor keeping oils upside today, slowing demand fears due to global inflation. So while the US labor market shows the resilience with lower unemployment claims, China's producer price inflation has surged to its highest level in 4 years. This means manufacturers in the world's second largest economy are facing high raw material costs while dealing with very weak domestic demand. So, if China's factory wheels slow down, their crude oil consumption drops, which fundamentally acts as a heavy anchor on global oil prices. So, that's one of the reason where we can see a strong oil demand, chances of price to break this level. So we need to wait for price to break. As I said, the price is still retesting this level. We need to wait until it breaks this level. So once you see a proper break, then we can easily enter. So if we look for make or break intraday zone, the key mathematical zone to watch right now is 6,828 to 6,884. So if MCX crude holds above 6,828 by the closing bell, so I'll just mark the level 6,828. So price is currently exactly above this level. So we need just one confirmation, that is to close the price to close above this level. So if you see that, we can see the near-time bullish recovery structure remains fully intact for the next week. So however, if it slips and closes below 6,770, expect fresh selling pressure due to the drag the commodity back down towards 6,680. So which is highly likely to happen because since due to the geopolitical tension, there is high chances of crude oil to go up. So have this bullish structure in mind and wait for the confirmation. So the so we have given update on crude oil and gold. So let me know if you have any queries related to your commodities, or tell your favorite, put your favorite commodities in the comment section. So at 9:57, we had given an update that Umber Enterprise India is an uptrend. So we had suggested, uh, like we had told you guys to keep this stock in your watch list since it was an uptrend. So we had updated this at 10 a.m. So price has moved around 1.41% after our update. So the reason we had said this was we got a strong buy sign yesterday. So we expected a bullish move since we got a buy signal from our indicator. So if we would have captured this yesterday, we would have got around 2.63%. And we are also given another stop. Yeah, we are also told that Kospi is an uptrend. So we also bought a buy here. We would have captured around 3.27%. So if you look at Nifty, we are just waiting for this price to close. So once close above it, then we can expect above this level. Once you see a break above this level, then as I have already mentioned, you could see a immediate volume injecting here. Yeah, so you can see the screen here. This was yesterday's call performance. So I'll just show you the calls that we gave yesterday. So the first one was around 9:16 a.m. So the strike price was 23,700 and the entry price was around 325 to 330. So we had given a call to our community to buy 23,700 call option at 9:16 a.m. So just show you the entry that we got. So you could see the so yesterday we exactly got a buy at 350. So we gave a signal at we gave a entry at 325 to 330. So our entry was around here. So we had captured around 146 points. So our target was around 475. So exactly price reached 475 and started to reverse. So this was the first call that we gave yesterday. So the second call is 23,800 call option, which was given on 9:25 a.m. yesterday. So the entry was at 285 to 290. 285 to 290 was the entry. Since we got a buy, we had given a call option and we would have captured around 112 points in Nifty. So our target was 392. So the price exactly went to 392 and gave a reversal. So you can see here 392 exactly, it made a high and it gave us a reversal. So exactly we have achieved all the target. So these were the two Nifty calls. So cumulatively you would have gained around you would have totally gained around 247 to 257 points, which is 40% of overall gain.
So now it's almost 3 o'clock. We will be discussing some questions which most people will be having in their head. Most people want to know these kind of answers and want to discuss these questions. Since they have, we'll be discussing these questions with the expertise. So yeah, what is IV crush like? How does it track option buyers during major events like earnings?
So IV is nothing but implied volatility. So in the morning session we had just analyzed option chain. We looked at IV. So this is a massive trap that burns a lot of retail option buyers. So implied volatility happens when a major event that market was anticipating, like a corporate earnings report, a union budget, or an election outcome. So leading up to the event, uncertainty is at its peak, which comes the implied volatility. So this makes option premium incredibly expensive. The moment the news drops, the uncertainty instantly drops to zero and the IV collapses. If you predict the direction of the stock correctly, the sharp drop in the option premiums caused by the collapsing IV can outpace the directional move, causing your options to lose value rapidly. So this is why advanced traders prefer selling options or using multi-leg option splits rather than buying naked options ahead of major news events. So this is how IV crush happens in traps option based during major events.
That was actually good answer and effective answer for that. So since we already discussed, I was telling about the short covering rally in the morning only. It's happening today. So what is short covering rally according to you and versus this long build up on the option chain? What are this both of the terms?
So let's break down the mechanics of how the big players move the market. So short covering rally happens when traders who previously sold call options get trapped because the market rises unexpectedly. So to limit their losses, they are forced to aggressively buy back those calls. This sudden rush of panic buying creates a massive upward spike in the price. And on your option chain, you will see the call open interest sharply decrease while the price moves up. This is what we discussed in the morning session as well. I had showed you open option chain call open interest and you could see the diagonal stripes which showed increase in the particular bar or either put or call. And you could see the hollow space in the bar. That is what we call as a short covering rally, particularly in the call open interest. So long build-up is more sustainable, structured, bullish move. It happens when traders are creating fresh, brand new buy position when they expect the market to go up over the long term. So on your charts, you will see both price and open interest increasing simultaneously. So this shows institutional money is actively entering the market to drive it higher. So this is how you need to read the short covering rally and long build-up on options.
Yeah, got it. Hope everyone got it. So next question is about the divergence of bullishness and bearishness. So what those terms like bullish and bearish divergence? What are those and how do we spot it?
So divergence is one of the most powerful leading indicator that a current trend is running out of steam. So it happens when the price of an asset does one thing, but a momentum oscillator like RSI or MACD does the exact opposite. So bullish divergence is nothing but the stock price falls and makes a lower low, but your RSI indicates forms a higher low. So this shows that even though sellers are pushing the price down, the underlying selling movement is actually weakening. It's an early warning sign that a bullish reversal is around the corner. So we'll just look at the bullish divergence. We have also found an indicator which shows that. So this is our own tool. So you can see a bull forming here. So I'll just show you. So you could see that price here has made a lower low, but we could see that the bull has given us a higher high. So once it happens, you saw a strong upside move. With that, we got a signal of buy signal. So we could easily made around 1.69% from here. And again, we saw a strong bear signal here, right? So price made a higher high, but we couldn't see the oscillator doing a higher high. It made a lower low. So since we saw that, we got a strong downside move. We got a selling candle here. So we would have captured easily around 493, is 1.99%. So this is how you need to use the divergence. So once you switch it to higher time frame, you will get even more accurate signals. So we got a strong bullish kind of bullish divergence. We got a lower low, right? So this was a lower low, but we got a divergence here. We got a strong buy setups. So if you are a swing trader, then you would have easily gained around 2.74%. So this is how you need to use the divergence tool. So this is what we call it as bullish or bearish divergence.
That was actually a impactful answer. So the next question is uh, how you differentiate between this true support breakout and fake out, which is we actually call it bull trap. So what's actually difference? Like how you differentiate it? True support breakout and fake out.
So we have all been caught in a bull trap where a level breaks, we buy, and the market immediately reverses on us. So to filter out fake outs, look at two crucial confirmation factors. The volume confirmation, a genuine breakout or breakdown must be accompanied by expanding volume that is well above 20 period average. So if a price breaks above a resistance level on thin low volume, it is highly unlikely an institutional trap to generate liquidity. So you always need to have a volume confirmation whenever you see a breakout. And the option chain confirmation, as we always discuss in the morning session. If price breaks above a major resistance level, say 58,000 on Bank Nifty, check the option chain. If the call writers at the 58,000 strike must start unwinding, we need to see a hollow block in that particular bar, so that we'll also get this negative OI change. If we choose click the cursor on that particular bar, you will be able to see the negative OI change. So once you see the price breaking above that particular level and you see a OI change turning it to negative, then the call writers are refuse to exit and instead add more position. The breakout is likely to a fake out. So, if, for example, if the price is reaching towards the 58,000 and you see a red bar increasing its OI positions, they are increasing more contracts, then the price will snap back down. So, this is how you need to confirm using volume and options.
That was very got it. Hope everyone got it. It was actually clear cut answer and but it was actually in an easy way. Hope everyone got the answer.
So yeah, so these were the most asked questions by the viewers. So we are left with another 20 minutes. So we'll just look at how Nifty performs. So we had we just told if the price closes up above this level, above this supply level, then there is a high chance of price moving towards 24,300. Let's see if the price closes above this. We have only 20 minutes left, so we need a strong candle to close above this, so we can see strong momentum. So if it closes above this level, highly likely to gap up tomorrow on Monday. So yeah, we'll just look at the Nifty chart and Let's see how the price behaves.
So we are heading into the final final session, and the market is giving us absolute show today. Sensex is also up over 650 points, and if it is gunning for highs. Honestly, the bull are flexing hard. So how you are reading this price action? Are you buying this momentum, or are you just skeptical?
Yeah, I want to tell you it's a beautiful day to be a bull. Just look at the market breadth. We have nearly 2,700 stocks advancing against just a little over 1,100 declining. So this isn't just one or two heavyweights dragging the index up. It's a broad-based cash buying. If you are trying to short this market today, you are essentially trying to stop a bullet train with a paper sheet.
Actually, that's a fair point. The breadth is incredibly healthy now, but look at where the main push is coming from. Like it's entirely an IT-led party, and TCS also dropped those quarter one number yesterday, posting that solid net profit growth. More importantly, giving great demand guidance for the rest of the year. This Tech Mahindra, HCL, and Infosys, they are all like flying 2% higher. But what happens if the item momentum cools down tomorrow? Like, does that make any drop?
That's a golden question. But as you said, it's not just IT. Look at the metal space also. JSW Steel, Tata Steel are both up by 22.4% this afternoon. So they are breaking out of tight 5-day consolidation zone. You know why? Because global macro fears are easing up. So remember those heavy US Iran geopolitical headlines that gave everyone jitters earlier this week?
Oh, absolutely. The market was terrified on of this massive supply chain shutdown in this Middle East.
Exactly. But look at the updates coming in now. Both sides are focusing on technical level diplomatic talks. Washington intentionally steered clear of hitting critical oil infrastructure, and OPEC is actually increasing output targets for August. So because of that, crude oil has cooled off beautifully to around 75 to $76 globally, as we discussed, seeing the technical chart a few minutes before, and it's also under 6,850 on the FCX. So when oil cools down, India wins. That's what we all know.
Oh, that's a massive relief value for our fiscal deficits. So, and you can see that reflected directly in the fear wars, right? Like India VX has absolutely crattered today, oh, down over like 6%, sitting right around 12.5. But let me just play devil's advocate for the chat here. For an option buyer, like a collapsing VX is a kind of nightmare, isn't it?
Spot on. So that's what we call IV crush in real time. So a few minutes before, a viewer had asked what is how does an IV crush impact option buyer. So we had just answered this question. So when volatility implodes like this, option premium deflate rapidly. So this is one of the examples for that viewer question. So even if you get the direction right on a naked call, the drop in VGA can eat up your profits. So today is a glorious harvest day for option sellers. But if you are a buyer, you need sharp, explosive directional moves, or you are just getting chewed up by time and implied volatile decay. So this is how IB is a nightmare for option buyers.
Exactly. Let's like talk strategy for the viewers as we approach the closing bell. We have a lot of people in the here in the chat asking like about holding positions over the weekend. With Nifty sustaining comfortably over 24,150, the trend is clearly bullish. But carrying a heavy unhedged directional trade into this weekend always feels like a gamble with global news like flying on this Saturday and Sundays. So, what's your play in this? What's your thoughts?
So if you ask me personally, if I'm taking anything home today, it has to be a hedge strategy, like a bull call spread or a credit spread. Never go naked position overnight into a weekend when geopolitical headlines are active. So, but if I am looking for an individual stock that looks solid for Monday morning, I'm watching Titan and IT majors. Titan cleanly took out its 20-day moving average on heavy afternoon volume today, trading past 4,600. So these two stocks would be IT sector and Titan would be my current focus. If you are asking me what stock would you keep on your watch list in this weekend, I would say Titan and IT major.
So yeah, actually, Titan looks phenomenal. On the flip side, we also need the warm the chat about some heavy distribution. So look at the trend today. Absolutely hammered down over 12% to trade near like 2009-27. So this is a pure institutional profit booking after an insane multi-month rally. So do not people, you guys, I'm telling, do not try to catch that falling knife just because it looks cheap right now.
Yeah, that's 100% right. Cheap can get a lot cheaper when big funds are exiting.
Correct.
So let's turn to the live chat. Drop your stock tickers right now. Let us know what you're holding into the weekend. So let me know if you want to get some stocks from us. Let us know in the comments. We'll also try to understand your understand what type of trader or an investor you are and suggest stocks accordingly.
So, before we sign off, a final reminder that all of our discussions today were for purely educational purposes and informational purposes only. So, so please do your own analysis or consult a certified professional before placing any real trade for the coming Monday or coming days.
So yeah, and there goes the final bell, guys. The Friday session is officially in the history books. So what an absolute blockbuster finish to this week. So Nifty is likely to hold its ground well above the 24,150 zone. So and Sensex closes out with the massive likely to close with a green candle. So the bulls have completely dominated the closing hours today.
Absolutely. It was a textbook short covering rally today, which happened today, heavily fueled by that IT earnings surge and must needed cooling off in the global crude prices. So, if you held into your long positions with tight risk management, today was actually a highly rewarding session to wrap up the whole week.
100%. The market breadth stayed robust right until the final tick. So providing that the underlying liquidity is rock solid. So now as we head into the weekend, my only advice to our community is to switch off your trading terminals, step away from screens and go enjoy time with your family and friends. The market will be right here waiting for us on Monday morning.
Completely agree. Completely agree. Don't stress over global headlines over the next 48 hours. So, if you are carrying hedged positions, you are structurally protected for now. Let's the data digest over the weekend, and we will be back live on Monday pre-market to map up the fresh opening strategy together.
Yeah. So a massive shout out to everyone in the live chat today. Thank you for the incredible energy, the brilliant questions, and for smashing that like button. If you haven't subscribed yet, make sure to hit subscribe and turn on notification so you never miss our live market updates. Have a fantastic, relaxing weekend. Everyone stay safe, trade smart, and we will see you all bright and early on Monday morning. So take care, guys, and peace out. Until then, uh, make sure you subscribe, hit the like button, and turn on the notifications so you never miss out our live market updates. So yeah, thank you.
So, yeah, guys, that was our today's session. We'll meet you on Monday and have a good luck who are holding positions and waiting for any headline newses and some global newses developments. Good luck for them and have a good day. We'll be coming live on Monday, the same time 9:15 when the market opens. So hope you guys have a very good weekend, happy weekend. Have a good day. Thank you so much for joining our live.